But right now, it's time to welcome our first guest, Sean Brodrick. Sean Brodrick is an investment strategist for Weiss Group. He travels far and wide seeking out values in the natural resources sector. A graduate of the University of Maine, he has more than 25 years of experience as a professional journalist and a financial analyst. He's a regular contributor to Dow Jones Market Watch, and he shares his insights and expertise frequently in the financial media. He's the ultimate author of The Ultimate Suburban Survivalist Guide. Sean, welcome back to the show.
Thanks for having me back.
You know my philosophy. You know each other well enough that you know that I'm a little skeptical about some of these so-called safe havens. There's no true safe haven. In reality, everybody thinks treasury bonds are, but let's face it, even the U.S. government can default on its debt, right?
Let's hope not, but it is possible.
Yeah, let's hope not, but it's possible. So of all the safe havens, which would you say are probably the ones that our viewers or income generation members should know about first?
Right. My experience has taught me that the real safe havens have to be precious metals, silver and gold. I mean, those are the ones that I've been working in for years, and they hold their value over time. They're the ultimate safe haven. When people are worried, that's where they go.
Okay. Now, some precious metals, I know have an ultimate demand. Copper, there's a need for copper.
Silver is very industrial.
Even silver is becoming more industrial. Mm-hmm. The one that's always gotten me is gold. You know, in a good economy, sure, there's always a demand for gold in the forms of jewelry and luxury items. But in the case of economic bust, that demand goes down. And last time I checked, no one's been able to get nutritional value into gold or being able to melt it down so you could turn it into food or turn it into shelter. So help me understand how gold really fits into this conversation of safe havens in the real world.
Right. Well, in the real world, you can't print gold, but you can print all kinds of other money. And there have been entire political movements based around the fact that, gold is money. It's something that the government can't mess with, and we know the government likes to mess with financial things.
Even though we haven't been on the gold standard in over 40 years.
No, we haven't. And in fact, the last time someone tried to put us on the gold standard, that was Andrew Jackson, it caused a depression. So it's not like, now there are people who insist that we should be on it. I think that gold is a definite part of a safe money policy.
But it sounds like it's more of a safe money policy, not because there's an underlying demand for gold per se, because most of the world now is based upon fiat currencies.
Yes.
But it is because of people's perceptions. So when the economy turns south, people buy gold as a perceived safe haven. You think more of it's perception than maybe reality?
Well, I think 95% of the market is perception. And
True.
Speaking of that, we saw a recent market downturn that began in September, and it's funny what bottomed in September was gold, because as people got afraid, what did they run for? They ran for gold. They didn't run for cryptos, they didn't run for other things. Gold is the ultimate safe harbor, and they know it.
So gold had bottomed out when the market was at its peak, and then as soon as the market started to fall, you're saying gold value started to come back up again.
Right, and then the miners that are leveraged to gold, those are the tickets on the rocket. Those are the things that are really taking off. Even though we've seen some terrible days in the market recently, gold miners, the good ones anyway, have been going higher.
So I want to talk to you about that when we get back from the break, because the reality of it is most people can't really afford to go ahead and buy gold bullion per se and insure it and store it, and they don't want to. It's too much of a headache. So I know there are some other ways to invest in gold more indirectly, and after the break I'd like to pick your brains about that if I can.
I would love to talk about it.
All right, sounds great. Stay with us. We'll be back with more from Mr. Brodrick, and we'll be back with more here on the Income Generation. But now it's time to welcome back Sean Brodrick. So Sean, right before the break, I promised our viewers that we'd talk a little bit about how the average person can invest indirectly in gold, if you will, and have it be much easier than trying to store and insure gold bullion. Tell us about some of that, please.
Sure. Well, you can always purchase gold through an ETF, which is what many of the big investors on Wall Street do. One thing that I actually favor more than buying physical gold, though I own plenty of physical gold, is I like to buy those select miners that are well leveraged to the price of gold. So when the price of gold goes up, their profit margins really widen. And so those companies can really start to look very attractive. And we're at a fascinating time for gold companies right now. And this is one thing that I have to mention, which is that right now, there are basically two ways for any gold miner to get more ounces of gold, because gold is a depleting asset. As you take it out of the ground, you have to replace it. One is to head out and explore for it. The other is to buy other companies that have gold ounces in the ground.
Okay.
It's now cheaper for companies to get those ounces through purchasing other companies than by exploring for it. And that's an unusual situation in the market that's usually resolved by higher prices, because it's really not worth anyone's time to go look for gold.
Interesting, quite interesting. Mergers and acquisitions. So, okay, so gold aside, I know you like silver. What else in the commodities market do you like?
Well, I like a metal that it's really hard for people to actually trade, but there are miners that are looking into it, and that's lithium, because of the electric vehicle revolution, and copper is also going to be a huge part of that story. So you look at those things, they look excellent. One last thing that I have to mention, which no one covers, and it's hated more than gold, it's uranium. That is on the brink of a bull market like you've never seen. And if the money going into the gold market goes through, say, a small tube, the money going into uranium has to go through a flavor straw. There's only about 40 companies you can trade in North America, and most of them are like explorers with cow pastures. So the profit potential there. Now, this is not, this is not income generation.
Sure. None of it is, but that's okay.
Right. So it's not what you would really do, but for a small portion of your portfolio,
it could work.
You can really, really do well.
Uranium, I think that's actually taken from Uranus. Isn't it the planet Uranus? No? I don't know. Maybe not. We'll be right back. Now it's time to welcome back Sean Brodrick. So Sean, now that we talked about the safe havens, if you will, that you tend to favor, tell us about a couple of safe havens that you hear about a lot today that you think are maybe more suspect.
Well, I have to tell you, I work with some very smart people over at Weiss Group who think that bonds are going into a bear market. And so if you listen to those guys, they are saying get out of bonds right now. So I have bonds in my own portfolio, but I plan on holding them until I retire, so I'm not that worried about it. But for people who actually watch that market, that's one you should actually be very careful of, probably.
Yeah, people say, bonds, but if they look at a total return strategy and you're trying to trade them, and look at total return from day to day, that's one thing. But like you said, if you buy a bond, you still have a guaranteed interest rate for the life of the bond. When it matures, you get your guaranteed repayment of principal back. So if you hold them to retirement, you still know what you have.
Exactly.
And one of the things that nobody talks about with bonds, that always amazes me, is the credit spreads. A lot of people tend to ignore. And I know with your company it's a little different, because a lot of people like to talk more about the riskier assets, talk more about the stocks and the commodities and so on, not so much the fixed income. But people who are in the fixed income markets per se, like we are, tend to realize that the credit spreads often tend to have an expanding and contracting element that oftentimes offset a lot of the risks of rising interest rates. So whereas if you were in government bonds and rates go up, you could take a shellacking. If you have the right level of credit spreads factored in, it could be a real softening effect.
Well, right now the real factor we are seeing in the credit markets is we are seeing U.S. interest rates go higher. And so that's actually one of the things driving the stock market lower. It's all a big scary thing, which brings us back to the thing we were originally talking about, safe havens. When people get scared, they run for gold. So people should keep that in mind. Okay.
So in 45 seconds or less, cryptocurrencies. I'm really suspect of that. I fear sometimes they could be, the next tulip mania, if you will. What are your personal thoughts?
Well, I can tell you Weiss Group has an entire division focused on how to make money from cryptocurrencies, but I'm not in that division.
So you can make money trading them, but
yes,
what are your
exactly.
personal thoughts long term? Will a cryptocurrency end up being the world's currency, or are you, like me, skeptical that long term that'll happen? Forget about short term trading opportunities.
Right. Longer term, anything can happen and probably will. the winning cryptocurrency may not have been invented yet, which will be the weirdest, scariest thing when that finally comes around. Personally, I love hard assets. I love silver. I love gold. I'm an old curmudgeon, and those are the things that are interesting.
And if there's other people like you that think like that, it's very possible that none of the cryptocurrencies end up being the safe haven. So go ahead and tell our Income Generation members how they can find you or read about you.
Sure. I have free columns that run 3 times a week, and that's at edelsoninstitute.com.
Thank you so much for being on the show. I appreciate
Thanks.
you being back.
I had a great time.
Stay with us. We'll be right back here on the Income Generation. I'm David Scranton.